Hello guys, it's Max here from Daily Market Movements, and in front of me we have the gold over the US dollar chart. As you can see, Friday, the final trading session of the week, we have had some very strange, horrible movements here in the gold markets. We've completely collapsed. It's as simple as that. We've had a false breakout. On Monday, things were looking so encouraging for the gold bulls. We broke out of this bullish flag that we've been trading in for the past 3.5 months. We went back to the swing highs, which were currently at 1960. But we failed to break above it. That's where that black line is there. And as you can see from there, we've been rejected. We targeted the 50-day EMA, which was that 1880 area. But as well as that, we had to close a gap down at 1990, which was this gap here that we formed on Monday at the open, of course. So that didn't really offer us too much support. Then we went down to the 50-day EMA, and as you can see, we've currently sliced through the 50-day EMA, and we find ourselves trading at 1862 with a session low at 1850. This is really not good for the gold market. This could, if we do get a daily close below the 50-day EMA, then this could indicate a move down towards a 200-day EMA, which is down at 1800. I'm still bullish medium to long term, but for the short term, if we do get that daily close below the 50-day EMA, which is below 1880 this evening, that means that going into next week, on Monday, when we usually do see some counterflow in the gold markets, that it could potentially indicate a move down towards the 1800 level, which is where that 200-day EMA is. However, on the flip side, if we can turn around late here in the US trading session, there's a possibility that we could form a hammer candlestick, which would then be very positive, and I would definitely be a buyer going into next week with a price target up at around 2000. Or even if we can get a daily close above the 50-day EMA, that's very encouraging. That would have told us that the 50-day EMA has held. Currently, I do not hold any buy positions here in the gold market. I do have a very, very small one, which I opened up at 1919, but apart from that, I have no major gold positions. I've just taken a huge loss today, where I put my hands up and I say that I got this one wrong, but this is trading. We're not always right. So sorry for anyone who did. I'm sorry to anyone who did have a huge trading loss today. This is trading. This is why it's very important to stick with strict management. We don't get it right all the time, but we get it right most of the time, and that's what's important when trading. So going into next week, I'm looking to see whether we can get a daily close below 50-day EMA first of all, and then I would become a buyer going into Monday session, and I will trade it back up towards the swing highs up at 1950. If we can break above at 1960, 1950 area where that black line is, where we've the swing highs, that's when we will then likely go towards 2000. I just want to also add that from a fundamental perspective, gold has been acting very strange lately. Of course, we had the incident the other day in the US with the Senate, with the pro-Trump supporters breaking in. We've had Joe Biden flip the Senate, and I thought that was going to be a positive, because that now allows Joe Biden to impose a much bigger stimulus deal where people of America could receive up to $2,000 for those who are unemployed, which would then mean that there'll be more printing of the money. That's the US dollar, of course, which would then devalue the US dollar, and that's when gold typically does very well. As well as that, we're in a low interest rate environment. There's plenty of fundamental reasons for gold to go higher here. I don't think this is over yet for the gold markets. I think that we can still easily return it. Even if we do go down towards the 200-day EMA, that's an area where I do expect plenty of buyers to return to the markets and buy gold. So I don't think it's over here. It's just a speed bump in the road back towards all-time highs. It's a shame that it's happened, but the RSI is looking much better, and I do expect value hunters to jump back into the market. But I'm waiting for a movement either above or down towards the 200-day EMA until I act here on the gold markets. So at this moment in time, I'm sitting on the sidelines, and I will hopefully put some more money to work come next Monday.